let's jump right in. Today's explainer is a deep, unbroken financial analysis of one of the absolute most fascinating pure-play tech stocks on the market right now. We're looking at IQM Quantum Computers.
So who is IQM? Founded back in 2018 and headquartered in Espoo, Finland, this is a pure-play quantum computing hardware and full-stack system provider. They actually just hit the public markets under the ticker IQMX. And look, what really separates them from the absolute sea of theoretical quantum startups out there is that their core technology is already out in the wild. They aren't just sitting around publishing research papers, they're a fully commercial enterprise deploying actual physical systems. And when we say full stack, we mean the whole shebang. They're handling everything from the physical chips to the incredibly complex software needed to run them.
To really understand this company, we kind of need a paradigm shift. IQM isn't selling a normal computer. You can't just run an operating system on it. They are selling complete access to quantum computing infrastructure. We're talking proprietary superconducting chips, the entire software programming stack, cloud access, and crucially, deep integration with existing high-performance computing environments. Think of these machines as highly specialized accelerators. They're meant to run right alongside the conventional CPUs, GPUs, and AI infrastructure that are already running the world today.
Right, so to achieve all this, IQM went with superconducting technology. Now, the advantages here are pretty clear. You get incredibly fast gate operations, which is just the raw speed at which the system processes basic quantum logic. Plus, you have massive government investment in this area, and it's compatible with established control techniques. But the trade-off is massive. This stuff requires cryogenic environments. We are literally talking about operating processors at near absolute zero. That is actually colder than the vacuum of deep space. This creates just immense system complexity. The processor, the cryogenics, the control electronics, the software, it all has to perform flawlessly together at temperatures that frankly shatter standard physics. So IQM isn't just competing on chip speed. They have to completely master this incredibly complex ecosystem.
So who are they actually up against? Well, the threat landscape is frankly terrifying. IQM is going toe-to-toe with mega caps that have virtually bottomless R&D budgets. We're talking IBM and Google, both of which are pursuing the exact same superconducting technology. And then, on top of that, you have alternative technology pure plays like IonQ and Quantinuum pushing completely different architectures. The threat level across the board is just exceptionally high. It's a true David versus, well, multiple Goliath scenario.
Which brings up the obvious question. How does a Finnish company with a fraction of Google's resources even compete? This brings us to IQM's ultimate competitive advantage. If you've been paying any attention to the semiconductor wars lately, you know that for European governments, keeping vital technology regional, achieving technology sovereignty, is now just as critical as raw performance. Europe is aggressively seeking strategic independence in AI and advanced scientific computing. So by being headquartered in Finland, IQM is perfectly positioned as the premier European sovereign quantum infrastructure provider. That's their moat. And you know what? That positioning is yielding real, undeniable commercial traction. IQM has built over 50 systems to date. But crucially, they've already sold 26 systems, with 17 successfully delivered as of mid-2026. This even includes their first major U.S. delivery to the Oak Ridge National Laboratory, plus a massive deal to integrate a quantum computer into the Lumi AI factory, which is connected to one of Europe's leading supercomputers. Basically, they're actively proving that hybrid quantum AI computing isn't just theory anymore. It's happening right now out in the real world. Okay, so how does this European advantage translate to the actual balance sheet? Well, for the first half of 2026, IQM posted revenue of 8.9 million euros. If you compare that to the 6 million euros they generated in the first half of 2025, that's a very impressive 47% year-over-year growth rate. They are scaling up rapidly from a small base. But enjoy that top-line growth while you can, because the bottom line tells a very different story.
Yeah. Against that 8.9 million in revenue sits a pretty brutal reality, a 60.5 million euro operating loss for just the first half of 2026 alone. Building systems colder than deep space, as you might imagine, requires incredibly expensive custom hardware, massive energy consumption, and armies of highly paid, specialized quantum physicists. The sheer cost of the research and cryogenics is incredibly heavy, and right now it is entirely suffocating the bottom line.
Listen, if you're a traditional value investor, you probably need to look away right now. IQM is a technology investment today, period. It's not a conventional earnings investment. With a market cap hovering around $2.6 billion and shares trading near $11,
You absolutely cannot value this using a traditional price-to-earnings ratio. The P ratio is effectively meaningless here because they're just so heavily loss-making. Investors who are paying tens of times forward sales, they're paying a massive premium for future quantum potential, not for what the company is actually earning right this second.
So what actually justifies that massive premium? One word: backlog. As of August 2026, IQM's total backlog crossed 102.1 million euros. To put that into perspective for a second, management's revenue guidance for the entirety of 2026 is between 42 and 47 million euros. That means their current secured backlog is more than double the midpoint of their annual revenue guidance. That's a massively bullish signal. It shows that commercial demand is tangible and it's growing.
But hold on, we have to look at this through a highly disciplined financial lens. Backlog does not equal immediate profit. Think of it kind of like building a custom skyscraper. The revenue funnel for quantum computers is notoriously long and complex. Every single one of those orders must be custom produced, physically shipped, integrated into a client's facility, and finally signed off and accepted by the client before a single euro hits the recognized revenue line. It is a painfully slow realization process.
To survive that agonizingly slow revenue funnel, though, IQM is armed with a strong post-listing war chest of 309.4 million euros. Because quantum computing is an incredibly capital-intensive industry, having this kind of cash on hand substantially reduces their near-term financing risk. It gives them the vital runway they need to execute on that 102 million euro backlog without, immediately running out of oxygen.
And they're deploying that capital aggressively, too. IQM has invested 40 million euros specifically to double its proprietary fabrication cleanroom capacity. These are the highly controlled, ultra-pure environments where these microscopic quantum chips are actually printed. By aggressively owning the manufacturing process, they maintain really tight control over chip development, production timelines, quality, and of course, their intellectual property. If quantum demand suddenly skyrockets, having this in-house scalable cleanroom capacity, that becomes a massive long-term competitive moat.
So we're really looking at two wildly divergent futures for this stock. The ultimate bull case is that quantum computing becomes seamlessly integrated with AI and high-performance computing over the next 5 to 10 years. Enterprise use cases in stuff like drug discovery, cryptography, and material science skyrocket, and IQM transitions from a hardware startup to a foundational quantum infrastructure platform. The bear case? Well, commercialization simply takes another decade. Emerging technologies often suffer from delayed adoption. If useful quantum applications remain limited, IQM will be forced to just continue its massive cash burn while generating relatively modest revenue, which would entirely destroy the current valuation premium.
And aside from delayed commercialization, there are some major existential threats here. The biggest one is technology risk. IQM is banking entirely on superconducting tech. What if completely different underlying physics, like trapped ion or neutral atom architectures, fundamentally outscale IQM's superconducting tech? Their technological edge could literally vanish overnight. Furthermore, the sheer financial gravity of competing with IBM and Google can necessitate unending capital raises, and that presents a constant severe threat of shareholder dilution.
But let's look at the upside for a second. What's the specific path for IQMX to become a 5x stock, hitting roughly $55 a share? Well, it requires a perfect storm of execution. We'd need to see meaningful, widespread commercial adoption, which drives exponential revenue growth. Simultaneously, their high-margin software and cloud recurring revenues must scale up, allowing their operating cash burn to fall dramatically. Is this combination of events possible? Absolutely. Is it probable right now? No. It remains highly, highly speculative. Conversely, the trapdoor is very easy to trigger. If you're a risk-averse investor, listen closely to this part. If revenue growth slows down because commercialization is delayed, those 60 million euro half-year operating losses, they'll act like a furnace, rapidly burning through that 300 million euro cash buffer. That forces a new capital raise at a lower valuation, leading to severe share dilution and the total contraction of the investment thesis. It's a nasty downside spiral. So, next time IQM has a quarterly earnings call, honestly, throw away the traditional EPS metrics. You want to keep this specific dashboard in front of you. You need to see revenue growth consistently hitting a 30 to 40% target. You want to see the backlog trajectory expanding from 102 million to 150 million and eventually to $500 million. You absolutely must monitor gross margins for a path to profitability, track the technical qubit performance, and most importantly, listen for real-world commercial use cases actually moving from research labs into production workloads. Looking at the broader ecosystem, it's important to realize IQM isn't trying to beat IBM at their own game. While IBM is the diversified giant and R&D powerhouse, and IonQ takes massive risks battling it out as a pure play in the US, IQM is anchoring itself purely as Europe's sovereign infrastructure play. They aren't trying to be all things to all people, right? They're leveraging geographical and strategic relationships to carve out a massive, highly defensible niche for themselves.
Let's bring it all together on the final financial scorecard. The technology and commercial traction are just undeniable, scoring an 8.5 and an 8 out of 10 respectively. I mean, they are actively putting systems into major supercomputing centers. But look at the bottom half. Profitability sits at a dismal 2 out of 10, and that drags the current valuation score down to a 4. This extreme contrast between technological brilliance and harsh financial reality leaves us with an overall score of 7 out of 10.
Which leads us to our ultimate verdict. You really must treat IQMX like a venture capital investment that just happens to trade publicly. It carries incredibly high risk with equally high upside. For aggressive investors who understand the sheer volatility and the very long time horizons of deep tech, this is a speculative buy. The backlog and the European sovereign moat are super compelling. But if you need predictable earnings and cash flow safety, look away. This is a clear avoid for now. Extreme caution is required. Look, we know quantum computing is going to be a massively disruptive industry eventually. But as we wrap up this explainer, I want to leave you with this final, provocative thought to ponder. When quantum computing inevitably makes that leap from the lab to true commercial necessity, will IQM be one of the companies that actually captures that massive economic value? They have the tech, they have the capital, and they clearly have the traction. But when the dust finally settles, will they master the economics?